Most people think the tech boom is all about software, apps, and artificial intelligence chatbots. But the reality is much more physical, expensive, and intensely competitive. Right now, the entire global economy relies on microscopic pieces of silicon that are harder to manufacture than anything else in human history. We are living through an unprecedented semiconductor supercycle, and the numbers are absolutely staggering. The global semiconductor market is officially on track to cross the historic $1 trillion threshold this year. To put that in perspective, that is a massive jump from just under $800 billion last year. What most people do not know is how fragile this entire ecosystem really is. A single factory disruption anywhere in the world can instantly freeze the production of cars, medical devices, and smartphones globally. This sudden surge in value is not just a temporary trend or pandemic-style supply chain glitch. It is a fundamental, permanent repricing of the hardware that powers our entire modern existence. AI chips currently make up less than 1% of all manufactured chips, yet they pull in roughly half of the entire industry's revenue. This means an incredibly small amount of silicon is capturing a massive portion of global wealth. To understand why this is happening, we have to look closely at the physical factories making these chips. A modern semiconductor fabrication plant, or fab, is easily the most expensive facility on Earth. Building just one high-tech fab can cost upwards of $20 billion. That is more than the cost of a modern nuclear aircraft carrier. These factories require rooms that are thousands of times cleaner than a surgical operating room. Even a single speck of dust can completely ruin a multi-million-dollar batch of silicon wafers. The machines inside use extreme ultraviolet light to carve microscopic lines onto silicon. These lines are only a few nanometers wide, which is thinner than a human strand of DNA. Before you skip to the end of this boom story, you need to understand who actually controls this technology. Most investors focus entirely on the tech giants designing the chips. You probably already know names like Nvidia, AMD, and Intel. Millions of everyday investors own these stocks through standard retirement accounts and index funds. Nvidia has seen its market value explode because it designs the graphic processing units that train massive AI models. Intel is hitting multi-year highs as it tries to build new factories on American soil. AMD is launching brand new AI processors for next-generation personal computers. These household brands are incredibly vital, but they are only the public face of a massive global pyramid. The surprising part comes next because none of those famous companies actually bake the silicon themselves. Nvidia and AMD are completely fabless, meaning they only design the blueprints for their chips. They rely entirely on third-party manufacturers to bring those complex designs to life. This creates a massive point of vulnerability for the global economy. If you want to find the real power players, you have to look deeper into the supply chain. You have to find the hidden companies that provide the essential tools, gases, and materials that make the entire industry function. Let us pull back the curtain on the stocks that average investors completely overlook. The most critical company in the world is one that most people have never heard of. It is a Dutch company called ASML. They hold an absolute monopoly on extreme ultraviolet lithography machines. These are the giant, complex machines required to print the most advanced microchips. No other company on Earth can build them. A single machine costs over $300 million and requires multiple cargo planes just to ship. If ASML stops shipping machines, global technological progress instantly grinds to a complete halt. Another massive, hidden player in this ecosystem is Taiwan Semiconductor Manufacturing Company, famously known as TSMC. They are the contract foundry that actually manufactures the advanced chips for Nvidia, Apple, and AMD. TSMC currently commands over half of the global foundry market share all on its own. Their CEO recently stated that it will be a long time before they can truly meet customer demand. This massive backlog creates a highly predictable multi-year stream of guaranteed revenue for them. If you are enjoying this deep dive into the hidden forces shaping our economy, please hit the subscribe button right now. We post fresh educational content mapping out global trends every week, and your support helps us keep creating these deeply researched videos. Now, what most investors miss is that the chip boom is currently shifting into an entirely new phase. We are moving away from just training giant AI models in massive, power-hungry data centers. The new frontier is all about advanced memory and running AI directly on local devices, which experts call edge inference. AI workloads require massive amounts of data to move instantly between the processor and the memory. This has caused a massive explosion in demand for high-bandwidth memory, known as HBM. This brings us to two more vital stocks that rarely make the evening news. South Korean tech giants Samsung Electronics and SK hynix practically control the world's memory supply. SK hynix recently suffered a minor toxic gas fire at one of its advanced packaging plants, which sent shockwaves through the tech world. That brief scare proved just how sensitive the entire global supply chain is to any factory disruption. Meanwhile, Samsung is actively showcasing brand new high-bandwidth memory mockups featuring advanced heat path cooling to prevent chips from melting under intense AI workloads. The memory segment alone is projected to surge by 250% this year. But the complexity goes even deeper than the memory chips themselves. To build these hyper-advanced components, companies need specialized chemical packaging and obscure manufacturing hardware. For example, a South Korean firm called Hanmi Semiconductor just introduced next-generation electromagnetic interference shielding equipment. This specialized hardware protects sensitive chips used in aerospace, low Earth orbit satellites, and advanced defense systems. As technology scales down to smaller sizes, these hyper-specific equipment providers are seeing their order books completely fill up. The critical piece of data you must understand next is that we are quickly hitting a physical wall. This massive silicon boom is running directly into a severe global energy crisis. A single advanced data center can consume as much electricity as a small town. Over half of all tech executives recently expressed deep worry that hyperscale data centers will not be able to secure enough power to keep expanding. Gas turbines, which are the fastest way to generate new localized power, are completely booked out through the next 2 years. The companies that figure out how to make chips highly energy efficient are going to win the next decade. This energy bottleneck is exactly why the industry is pivoting hard toward chiplet architecture. Instead of building one massive, expensive, power-hungry chip, engineers are now snapping smaller, specialized chips together like Lego blocks. This drastically cuts down manufacturing costs and significantly improves power efficiency. This shift means the next stock market winners might not be the companies making the best silicon, but rather the companies creating the best software to link these modular chiplets together. For intermediate investors, the actionable takeaway here is to stop chasing the overhyped headlines. The obvious consumer tech stocks are already trading at massive premium valuations. The real, sustainable value is hidden deep within the semiconductor supply chain matrix. Look at the equipment manufacturers, the specialized chemical suppliers, and the high-bandwidth memory producers. These essential businesses will continue to thrive regardless of which specific AI software chatbot wins the consumer race. The silicon supercycle is actively rewiring the global balance of economic power. Countries are currently spending hundreds of billions of dollars in subsidies to bring chip manufacturing back within their own domestic borders. This is no longer just a standard tech trend. It is a matter of national security and economic survival. Understanding the physical reality behind the digital world is the ultimate key to navigating the modern market. To see how these massive supply chain vulnerabilities are playing out right now, click on our next video covering the global shipping crisis. Quick disclaimer, none of this is personalized investment advice, and I'm not a financial advisor. Subscribe so you are ready before the market opens. See you tomorrow.